It's now time for the Business Report with Joel Crossgill.
Lots to share with you in the Business Report today, emerging from the Sagicor Group Jamaica's Q3 press briefing, where the CEO and president of the largest company on the Jamaica Stock Exchange by market cap for the past 2 years, Christopher Zacca, reported a reduction in net profits relative to last year's mammoth $10.07 billion result.
The group made $6.6 billion year-to-date in net profit, and for the quarter alone, it was $2.63 billion in profit. The truth is, this year we have faced some economic challenges. The interest rates have started to come down, but they remained high for the better part of the year. And of course, there is a lag in the effect of reducing interest rates to translate into greater economic activity. So we haven't seen that yet. We are also, though, extremely pleased that our core business lines continue to perform in a robust way. I have to give a special word of thanks to Charbel Johnson Cunningham and our bank team at Sagicor Bank. They have outperformed a number of year-to-date statistics and metrics, and they have shown stable and consistent growth in many areas of their business.
CEO of Sagicor Bank Jamaica Limited, Charbel Johnson Cunningham, provided additional insight in the commercial banking segment year over year in creating new milestones of performance.
Sagicor Bank continues to deliver. This year we're 20% as at September year-to-date more than prior year, right? And this comes from the revenues are up roughly about 13%. And in terms of net electronic channels, that's up 20%. Loans, that's another 13%. So overall, year-to-date, the bank continues to do well.
Given the difficult economic climate and several one-off expenses that contributed to the decline in year-to-date profits for one of the oldest insurers in the Americas, SGJ has remained focused on improving service levels while driving internal efficiencies, strategies that have resulted in meaningful growth in the group's insurance revenues and net interest income over the prior year, as reported by Mark Chisholm, Chief Revenue Officer for Sagicor Life Insurance.
We have seen robust and strong revenue growth from both the long-term and the short-term business in the insurance market. Our core distribution channel, which is our sales team, internal sales team, they have been driving the sales. So we are seeing an 18% year-over-year increase when it comes to revenue. Also, our broker partners, which contribute significantly to the success and growth of both the long and short-term business. We continue to see strong, robust revenue coming into the insurance segment of the market. For example, when you compare 2023 to 2024, there was a $5.25 billion increase in revenue year over year.
There was, however, a significant loss within the executive team as the group president confirmed the resignation of Mark Thompson, CEO of Advantage General Insurance Company AGIC, a member of the Sagicor Group.
Mr. Mark Thompson, the CEO of Advantage General Insurance Company, has resigned effective October 31st, and we wish him the best going forward and very amicably determined the fact that he decided to move on for personal reasons.
Thompson, who has led AGIC since July 2007, playing an important part in leading the company's commitment to becoming the digital insurer of choice, has also stepped down from all Sagicor-affiliated boards. In the interim, AGIC's Deputy CEO, Dave Morrison, will assume the role of Acting CEO, managing day-to-day operations. Mr. Morrison, who is a chartered accountant, rejoined the AGIC team in 2009 and was appointed Deputy CEO in September 2023. Meanwhile, in the investment banking segment, Executive Vice President and Chief Investment Officer at Sagicor Group Jamaica Limited, Tracy Ann Spence, noted some improvement in interest margins despite the challenges posed by current market conditions.
Net investment income was actually up 8% year over year despite those challenges. That was primarily driven by increase in net interest income. In Jamaica, we had a 29% increase in net interest income, and we were able to do that through prudent balance sheet management. We capitalized on the higher interest rate assets. Despite rising funding costs, we were able to manage that effectively and improve our margins. Our recurring fee income, which is the fee income we earn from the assets that we manage, that has been trending in the right direction as well. And as I speak about the assets that we manage, we remain dominant in the unit trust space. We have a 36% market share as it relates to unit trust. And even within the challenging environment, the majority of our funds have outperformed their benchmarks year to date. When we look at the particular asset class segments that we track, of the 6 segments, we are top 3 in 4 of those 6 segments. So, you know, it has been a challenging environment, but we do have some positives that we're proud about and looking forward to the quarter ahead and next year.
And that was your business report. I'm Joel Crosskill.